Assalamualaikum and hi. My name is Muhammad Aman Najmi bin Burhan. Today we will discuss about operating segment and interim financial reporting. Let's start with the definition. An operating segment is basically a component of an entity that engages in business activities which generate revenues and incur expenses. And importantly, the result of that component must be reviewed by the Chief Operating Decision Maker, also known as the CODM. And lastly, the segment must have discrete financial information available. Without separate financial data, it cannot be considered an operating segment. Next, how do we identify operating segment? MFRS 8 uses what is called the management approach. This means segments are identified based on the same internal reports that management uses. When identifying segments, we look at several factors. The first one is the nature of products or services. Second, production processes. The third one is type of customers. Next, distribution methods. And the last one is the regulatory environment. This allows segment reporting to reflect the business as management actually views it. After identifying operating segments, the next step is determining which segments are reportable. A segment becomes reportable if it meets any of the 10 thresholds. These thresholds are: the first one, revenue. If the segment's revenue is 10% or more of total segment revenue. The second one is profit or loss. If its profit or loss is 10% or more of the total profits or total losses. The third one is assets. If segment assets are 10% or more of total assets.
Hi, my name is Muhammad Amzah bin Muhammad. For question 2 is, what is Chief Operating Decision Making? So the Chief Operating Decision Making, which is CODM, is referred to the person or group of people within an organization who is responsible for making key operational and strategic decisions. This role is important because the CODM will oversee how the company's different business segments perform and decide how to allocate resources among them. So the CODM is identified based on what they do, not their job title. In other words, the CODM is whoever actually reviews financial and operational information. They evaluate segment result and direct the company's operation. In many organizations, the CODM might be the CEO, which is Chief Executive Officer, the COO, Chief Operating Officer, or maybe a group of senior executives who meet regularly to review performance and make strategic decisions. So overall, the CODM is to evaluate performance of business segments, allocate resources such as budget, staff, and investment, and the last one is to guide strategy and operation based on segment information. Next, these are two example CODM in publicly listed Malaysian companies. At top left, strategy and operational decisions are led collectively by the executive chairman and the senior management team. This group regularly reviews the performance of each business segment and makes key decisions on resources and strategy, which is Mr. Lim Cheong Guan as the managing director plays a major role in overseeing operation and guiding segment performance. So for the press matter company, the group managing director, supported by the executive committees, which is they act as the CODM. This leadership group reviews segment information, monitor performance, and make strategic and operational decision. So Tan Sri Dato' Kun Poh Kiong is the group CEO that provides all leadership and direction in resource allocation and performance assessment.
My name is Nur Ain Ishira and I will now proceed to question 3. We identified two types of segmental reports and provided examples from a Malaysian listed company. The first type is the business segment report. This report divides a company's financial information based on different business activities. For our example, we chose Pressmatter Holdings Berhad. In their 2024 annual report, the company applies this type of segmental reporting by separating its operations into smelting and extrusion, trading, refinery, and investment holding. By using business segment reporting, Pressmatter provides clearer insight into how each activity contributes differently to the group's operations and financial performance. The second type is the geographical segment report, which organizes financial information based on the regions where the company operates or sells its products. Pressmatter also applies this method in its disclosures. The company reports financial information by geography, specifically Malaysia, Oceania, Asia, and Europe. This means users of the financial statements can see which regions generate the most revenue and where the company's assets are located. By reporting segments geographically, Pressmatter shows the extent of its global operations and highlights any regional dependence or exposure to market-specific risks. For this part of the question, the key benefit I will discuss is how segmental reporting provides a better understanding of a company's performance and risk using Pressmatter Holdings Berhad as the example. From the company's segment report, we can see the segment profit for the year 2024. Smelting and extrusion is 1,1954,667, trading 21,868 ringgit, refinery 88,349 ringgit, and investment holding is 582,191 ringgit. These figures show very clearly which parts of the business contribute the most. The company relies heavily on the smelting and extrusion segment, while trading and refinery contribute only small amounts. Investment holding also adds a notable profit. By reporting each segment separately, users can easily identify where the company's strengths are and which areas carry more operational or financial risk. This level of detail helps users understand the company much better than looking at only the total group profit.
Other than that, segmental reporting also helps user of financial statement understand how company operate in different region and how stable its overall performance. By showing result in geographical segment, investor can see whether the company depend heavily on one market or has a diverse source of revenue. For example, according to Pressmatter Aluminium Holding Berhad Annual Report 2024, revenue from external customer come from Malaysia, other Asian region, Europe, and America with total revenue of RM 40.91 billion after elimination. This shows that Pressmatter earn income from various regions. Therefore, if one region faces economic slowdown, the company still can maintain stable overall performance through stronger scale in other areas. This is consistent with the objective of FAR570, which is to help investors and analysts to understand the financial effect of company operation across different economic environments. Now, I will give you a brief explanation about what is MFRS 134. MFRS 134 or Interim Financial Reporting is a standard that explains how to prepare and present financial statement for an interim period, which is reporting period shorter than full financial year such as quarterly or half-yearly report. The main purpose for this standard to ensure that company provide timely, relevant and reliable financial information between annual report, allowing the investor, creditor and other stakeholders to understand the company financial position and performance throughout the year, not just at the year end. Not all companies are required to prepare interim financial report. However, under Bursa Malaysia listing requirement, all publicly listed companies must submit quarterly financial report within 2 months after the end of each quarter. This to ensure the transparency and consistency in the financial information provided to the public. An interim financial report includes key statements such as SOFP, SOPL, and other comprehensive income, SOCE, SOCF, and selected explanatory note. This note usually contains information detail such as accounting policy use, change in estimate, seasonal effect, unusual item, dividend paid, and significant event occurring after the reporting period. FAR134 also state that the company must use the same accounting policy as in their annual report. If the policy change, yearly interim report must be restated to keep the financial information consistent and comparable. Revenue and expenses are recognized when they occur, and inventory are measured at the lower cost and net realizable value.
Now, I will briefly explain two significant events and transactions that can affect an entity's financial position under MFRS 134. The first event is business combinations, acquisitions, or disposals. During an interim period, any change in the composition of the entity must be disclosed. This includes mergers, acquisitions, the purchase or disposal of subsidiaries, and major restructuring or discontinued operation. These events can significantly impact the financial position because they change the company's assets, liabilities, and equity. They also affect financial performance through gains, losses, or adjustment like goodwill. The second event is the issuance of repurchase of equity debt securities. Companies must disclose any issuance, cancellation, repurchase, or repayment of shares and debt instrument. This transaction affect the financial position by changing the company's capital structure and cash flows. They also influence performance through interest expenses, share premiums, or any related gain or losses. We'll be looking at the financial reporting structure for Top Glove Corporation Berhad. As one of the world's leading manufacturers of rubber gloves, understanding their reporting cycle is crucial for analyzing their performance and financial health. The first quarter always concludes at the end of November. For our current interim period, quarter 1 ends on November 30, 2024. We compare this directly on the same period the prior year, the comparative interim period, which ended on 30 November 2023. Moving to quarter 2, and is at the end of February. The current interim period ends on February 28, 2025. Quarter 3 concludes at the end of the May. The current interim period end is 31st May 2025, which is compared to 31st May 2024. Finally, quarter 4 is fiscal year end, which occurs at the end of August. The current interim period ends on 31st August 2025, completing the full 2025 fiscal year reporting. This is compared against the end of the previous fiscal year, 31st August 2024.
Next, we move on to the individual and cumulative interim periods. For the individual interim period, which is cover the half year, the current period is the second half of 2025, while the comparative period is the second half of 2024. For the cumulative period, which is show the year-to-date result, the current period ends on 31st August 2025, and the comparative period ends on 31st August 2024. These reporting descriptions help stakeholders assess short-term performance for the half year as well as the overall performance for the full year.